Hey everybody, welcome back to the channel. If you're new here, this is just me going over my Wealthsimple trade TFSA that I started earlier in the year and just the progress that I'm making trying to grow a dividend-focused portfolio to try to generate a passive stream of income. So if you like this kind of content, you want to see what I'm buying, what I'm doing, how my dividends are progressing, feel free to like, comment, and subscribe to the video just so you can follow along with the journey and just see how I'm doing and maybe the lessons we can learn along the way as we're trying to invest, together, because investing is a long journey. It can be very complicated, and if I make a mistake or if I have some wisdom to impart on you, or you have something for me or for other people, just feel free to just jot something down in the comments below and let me know what you think. All right, so for the portfolio, currently it's kind of stagnant today, just up, $12, so not much change there. The total value is $77.49 and 45 cents currently, and we're just working our way to trying to hit a $10,000 portfolio, so that's going to be my big goal, just trying to hit that landmark in terms of portfolio value. For the week, we're just down $7, not much change there. For the month, we're up 3%. For the past 3 months, we're up 2%, which is $179.45. And in the last year, since we've started, we're up 10%, or $707.12. Again, this does include like the current value of my holdings, so I don't really focus on this stat too much. I mostly focus on the dividend income that the portfolio provides. So that's the number one thing. I just want more shares of great companies and more income so I can purchase more and more shares and let the dividend snowball just continue building and compounding over time. So we have a new holding today. I spent $500 on a new position and actually sold out of 2 old positions as well. So I'm going to be going into why I sold those positions and what I bought. Up, ENS is up, which is just our Enbridge split share fund. I actually sold out of Slate Grocery REIT, and I bought this one because they had an offering, so the share price went from the 16s to low 15. So I was getting around just under a 9% dividend yield from Slate Grocery REIT. But again, I believe that the shares, the price of it was basically at its ceiling. I don't think it could go up anymore. So I decided to trade it in for more income because ENS was offering me about a 10.2% yield, and I'm going to take it because we love Enbridge. And it's just a great cash flow machine. They have a lot of things going into the future with biogas and renewables as well. I bought another share of Intel to get up to 7 shares. So gonna get into why in a little bit as to why I bought another one of this. But yeah, the stock price dipped a lot. I went into it over a previous video. So if you want to see that, you can check it out on my channel. Power Corp has also been up since I've bought it. Same thing with Smart Centers. And the new position is actually Suncor. So yes, we are actually going heavier into the oil and gas industry. And I'm going to get into why in a moment. And the stock that I actually sold out to get the $500 worth of shares was actually Northwest Healthcare Properties REIT. And there's nothing wrong with that investment, frankly. It gives a nice stable 6% annual dividend yield, and it pays you every month, and it's very stable. The stock price doesn't move very much. Now, I believe that Suncor has a lot of upside in the next 1 to 2 years. So, I believe that with that upside, I will make a superior return investing in Suncor versus just holding Northwest Healthcare, which is just, paying me a 6% yield, and there's no share appreciation or growth, really, other than that dividend yield. In my previous video, I mentioned that Intel dropped tremendously to $49 a share, and I bought more shares and increased my position. And I'm gonna show the insider buying at Intel increased. No insiders are selling. There's only buying and heavy buying So, you have people in the company, you have Pat Gelsinger himself buying a ton of shares. So the insiders are very excited about Intel at the current prices. And one thing to note would be that for a lot of the individuals, they've never bought Intel shares before. So for many, this is their first time, or for many others, it's their first time in years that they've bought Intel shares. So that really shows, where the people working in the company and how they feel about it. So they feel very optimistic, and Intel definitely has a direction now. It has a goal. I feel like I know where Intel is headed, and that hasn't been the case in the past. And that's why I haven't invested in Intel until just recently, because now that I know that there's a plan, there's a reason to invest in this company. So yes, let's get into it. Let's get into the new position of the portfolio that I bought. I bought Suncor, and I'm going to be going into why. Why did I buy the stock? So the biggest piece of news, in my opinion, is the reinstating the dividend back to its normal levels. So earlier in like 2019, 2020, they cut their dividend in half to 21 cents a share. But due to this third quarter that they've had recently, where they've generated so much in profits, they've reinstated it back to 42 cents a share. So essentially, you're going from like a 2.5% dividend to an over 5% dividend yield, which is insane. And you have to keep in mind that the price per share of Suncor is way down from where it was back in 2018, 2019. It still hasn't recovered. So it's quite a good value at the moment. And the company also said that they would buy back 7% of the shares. So that's incredible. So that's going to give you a greater return, because the fewer shares outstanding in your company, the more that your shares are worth in the company. You just have more ownership of the company. Also, they've paid off a massive amount of debt. They're years ahead of schedule, actually. So since the start of 2021, Suncor has reduced net debt by $3.1 billion, and the company expects to return to 2019 net debt levels during the fourth quarter and be within its 2025 targeted net debt range by the end of the year. So before the start of 2022, they're going to have the debt that they were anticipating to have in 2025. That means they are 3 years ahead of schedule of paying off their debt. So instead of waiting on a turnaround and recovery in this company, the recovery has not only happened, but Suncor is currently thriving. So I think that this is a great time to get on. Of course, you have to be comfortable with, the oil sector as a whole, whether you have any, ethical reasons why you wouldn't want to invest in oil, for the, reasons for, for the environment or whatnot. Or if you're just, scared of a commodity-based cyclical stock like this one, because Suncor will live and die by the price of oil. So yes, oil is going up. Of course, we have seen oil go down, even go negative. So that's the risk we're taking. However, there is an energy crisis. So the price of oil and gas is going up, and demand cannot be met. So people have to fill up their cars. They have to commute. People need to fly places. People need to travel. People need to do a lot of things with oil, and there's just no getting away from it right now. So Suncor made massive cash flows, and it's not only recovering but thriving. So oil is around $70, and now it's at $80. So their fourth quarter, if oil just stays where it is right now, is going to be even better than it was in the third quarter. So just imagine what oil will generate at, $90 or $100 a barrel. It's going to be absolutely insane. And again, my thesis is if Suncor, if the price of oil continues to go up or just even sustain itself, Suncor will continue making more cash flows, keep reducing debt years ahead of schedule, buy back shares, continue to increase the dividend. And honestly, the current share price is very low and a good value. So I calculated a 12% return this year alone from buybacks and the 5% dividend yield. So they buy back 7% of the shares, you get a 7% return due to fewer shares outstanding. Tons and tons of shares are taken away, and you own more of the company. You're also getting that 5% dividend yield. And of course, if their cash flows are increasing, they can increase that dividend very shortly. We'll see how long it takes. They've just reinstated it back to its normal levels, and they can grow it more. And why Suncor over its competitors? Well, the stock hasn't recovered. So its other competitors have basically already recovered to their pre-pandemic levels. So I think there's more upside in owning Suncor versus other oil and gas producers at this time. And for the dividend income, we've earned $190, $197 in dividends so far in the portfolio, so very close to hitting the $200 mark. Our annual dividends are at $452.57. So pretty close to hitting $500 a year in passive income, which is very nice. Monthly, we're making $37.71. Weekly, we're making $8.70. And on the daily, we're making $1.24. So one of our first goals was just hitting $1 a day of passive income. We're already a quarter of the way, nearly to make $2 a day. And this will just continue to increase over time. And I calculated my weekly passive income, just pretend that I'm working a 40-hour week job. It's like I gave myself a 22-cent per hour raise, without doing anything for it, just investing in productive assets that pay me and provide value to society. And if we go to the dividend growth, we can see a nice little trend line. So it is just trending upwards in a very predictable fashion. And that's the great part of dividend investing, is that you know exactly where you're going to be. You can effectively calculate what your return will be. Whereas with growth investing or index funds, the price of the shares that you own is so important, because you don't have a yield to give you an income. You can't get value from your portfolio unless you sell your shares and get rid of your ownership of a great company, because why else would you be invested in it? You have to believe in the company. And the last thing you'd want to do is sell shares in it. So that's the great part about dividends. You can take them out and spend, and you don't own any less of TD Bank or Apple or any other great business. So October was our greatest month of dividends to date at $38.75. So this is great to see that we're just breaking new all-time highs. March is the original, then June crushed it, absolutely crushed it, and now October has surpassed June. So this will only continue off into the future. We've received $10 in dividends so far in November. And the great thing is I even noticed the effects of the snowball effect and compounding right now, because the first time it took me to make $100 in dividends was around 6 to 7 months to make just $100 in dividends. Now, it sounds like a long time. Yeah, it's not very impressive. But the second time was 3 months. I got that down to 3 months. It took about half the time to make $100 in dividends. And now, at my current yield, at my current amount of dividends earned, it's actually going to take me 2.65 months to make $100 of passive income. And as these dividend payments just continue compounding and growing over time, that the amount of time it's going to take me to get $100 is going to shrink and shrink. So even in less than a year, I'm noticing considerable growth in the income the portfolio is providing. And that's why this is my favorite method of investing right now, just because it's observable. You can see the results, and it can reinforce good habits, because even if the market takes a tumble, I know that I'm increasing my share count, I'm increasing my passive income in these fantastic companies, and I'm delighted to add more shares at lower prices to get a higher yield. So yeah, don't forget to sign up for Wealthsimple Trade below in the description if you haven't already, because you can get the value of 2 free stocks. So yeah, you could get like an Amazon share or something, and they'll give you the value of that. So have a great day, guys, and good luck on your own investment journeys as well.